the broader markets, Tuhin, and your opinion here is,
yes,
very important. Now, if I look at the liquidity situation in the realty sector, it's not very pretty. We have loans worth 1.25 lakh crore, which are outstanding, versus sales, which is just 57,000 crore rupees, as cited by a recent report. Is that a big opportunity for Blackstone India, or would you worry about this debt unwinding?
So debt unwinding will lead to some short-term issues, and I don't know what the long-term ramifications of that are. But honestly, most of the issues are present in the residential space, where we have limited presence. It leads to some opportunities for us, because in these markets, people tend to liquidate assets that they can liquidate, and we are seeing a bunch of opportunities where we're trying to acquire some very high-quality assets, which developers need to liquidate just to meet the liabilities.
Mm-hmm. So this is not an opportunity for you to look at residential portfolio building in an aggressive manner? Not just yet?
No, honestly, Manisha, we are not kind of wedded to any one strategy. We are opportunistic investors. We kind of look at the risk return in every asset class, right? So honestly, it's not that just because of the liquidity crisis, we start building the residential vertical. We kind of see the risk return. We kind of see the underlying fundamental of the business. And if that makes sense, we'll kind of start building a portfolio. I'm not sure whether fundamentals are still fully reached that level.
All right. So you're suggesting that the risk-reward ratio is still not tilting towards the reward part. Okay, let's come back to the mall story. So you have carved out Nexus Malls. Are there opportunities to acquire underserved, badly designed malls and turn them around? Or would you also look at investing in construction of new malls?
So we've done a bit of both. We have turned around malls that have fallen into trouble because of lack of capex or lack of proper management, and we've done a few of those. And then we continue to look at opportunities in the space. However, you can only turn around malls that have been designed okay and have not been strata sold. If a mall has been strata sold or has got a bad design or a bad location, they're very difficult to turn around. So those we avoid. We do look at stuff that's kind of under construction, and we've done a few of those. So, we look at the whole spectrum of opportunities. Eventually, we really want to create an institutional class of assets. So whatever leads us there.
Anything in hospitality? Because we had recently a big deal of a company-listed player which is under stress, getting acquired or at least invested in by a large foreign player. Can you sense some as well in the hospitality segment?
So we already have a fairly reasonable presence in the hospitality space. It's just part of our larger portfolio, so we don't talk about it separately. But we do own 5 or 6 hotels in the country, and we're kind of actively looking to grow that as the fundamentals of the business are improving quite dramatically.
All right. So let me ask you a question that everybody is talking about now. You entered the India market in 2007, took some contrarian bets when most others were conscious, and you're now sitting on one of the best real estate office portfolios. But times have changed, Tuhin. There's a beeline for good realty assets, be it GIC, KKR, Brookfield. Is it harder now to find right-priced assets in the market?
No, not necessary. There are two changes, Manisha. Remember, when we started buying assets 6-7 years ago, the market was much smaller, right? So the market itself has doubled in size. So it's not like we are kind of fighting of the same pie. The market itself has doubled in size. Also, when we were acquiring assets, there were not that many sellers of good quality assets. The number of sellers or people willing to transact has also increased. So I think the pie itself has increased. The other thing that's kind of happened to us is that we've been doing this for a few years now. We've kind of gone up the learning curve and therefore are able to do more complicated transactions which we weren't able to do a few years ago. So I think two things have happened. The pie itself has increased and we are kind of playing multiple fields now.
Well, everybody believes that Blackstone understands India's real estate complexity is probably the best. But I'm going to go back to John here. John, so what would you like Tuhin to take, or where would you like Tuhin to take Blackstone India over the next 5 years? Double the portfolio? Is that too conservative a target for him?
Well, we don't really set a target and say we're trying to get to a certain size. It's really opportunity driven. But if you have the kind of bullish outlook we do on India, and you have the kind of team we have on the ground with Tuhin, and by the way, it's the same story with Amit Dixit in our private equity area, it makes you want to do more. So yes, there's some pressure on Tuin. We expect the business to grow.
Gentlemen, thank you very much for joining me, and hopefully, we will see India's first REIT, like Tuhin said, right around the corner. Thank you for sharing your perspective with us.
Thank you for your time.
Thank you, Manisha.
So the key strength behind the Blackstone success is its patience in waiting for the right investments and opportunities. And both the gentlemen here said we are here for the long term, for the industry. A successful REIT from the Blackstone stable would bring in the much needed cheer for the sector as a whole.